All right, guys, so today we're going to be talking about futures. It's not going to be how to trade futures, but it's going to be more so a video explaining what exactly they are and why they may or may not be beneficial for you to begin trading instead of trading in the cash equity markets, which are going to be the options and stocks. And first of all, what I recommend as my brokerage is going to be at alexsoptions.com/recommended, where you can download and try it for free and kind of see what's going on this. It's going to be NinjaTrader. And the reason I like this is because you get lower margin requirements, which we'll talk about in a sec, and you get lower fees if you actually do buy the platform. And I believe I can get you guys a good deal to have lower fees for a lower price compared to what their website says. But that is something in the future you might have to ask me about. But anyways, it allows you to, first of all, trade futures. And second of all, this is a charting platform with a different brokerage company behind it, which means this charting platform actually can connect to many different brokerages. And what's beneficial about that is if I were to pull up mine, I'm not going to show you all of my information, but you can see I have my NinjaTrader account, and then I can connect my TD Ameritrade account, which should pop up in just a second. You're going to see my TD Ameritrade. So now you can connect a ton of different stuff and you can trade it all from the same platform. And the NinjaTrader platform then also gives you, you can create your own indicators and stuff like you would on Thinkorswim, but you can also create things that automatically trade for you, which I'm actually doing currently. So if you're looking to buy that or get into that space, NinjaTrader would be my recommendation to do that. So now that we got that out of the way, and also, by the way, I'm not paid by them. I don't get anything from them if you guys sign up with them. It's just something that I like and I've actually had a really good experience with so far, as well as many other people in my Discord. But anyways, so what are futures contracts? So we're going to go to Investopedia. So just the key takeaways, it's going to be a financial derivative, which means that it is derived from a price of a different asset. So you're not trading, you are trading the price action of this, but this price action is going to be based off of what people are speculating, the future price, that's why it's called a future, of the underlying, which is going to be kind of like an options contract, which is what I'm going to use to kind of portray the futures as. But the futures, which we're looking at MES, are going to be based off of normally the indices, or you can also trade futures on commodities like oil, gas, I believe, gold, other metals. You can even trade like cows and shit. Like it's pretty interesting, right? And the way that futures contracts work is that since you're speculating, and this is a derivative, it's going to be a leveraged derivative, kind of like options, how options move more dollars than the underlying stock when the stock moves. It's going to be the same type of thing on here. But instead of it being like an option where it can just go to zero, you can actually go negative. And the way that works is there's a margin requirement like we were talking about earlier. So based on how volatile or how much money each tick is worth is going to kind of decide the margin requirement. So the lower ones are going to be lower tick values and the higher ones are going to be higher tick values, which means if you're trading something like copper, each contract is going to be like something crazy like $5,000, and each small move is going to be like $100 or $300, something crazy. And if you're trading something like MES, where each 0.25, so 25 cents on this is a tick, so each one of these is going to be $1.25, and the margin requirement on NinjaTrader is going to be $50. In comparison to something else like Thinkorswim, I believe the margin requirement on there is like 700 or something insane. So now you can trade this with just $50 in your account. Obviously, you'd want more, because if it goes underneath where you enter and you only have $50 in account, you then fall under the margin requirement. Meaning if you buy this, let's say you bought it up here and you had $50 in your account. Now it goes a tick below. Now you only have $48.75 in your account, because each tick is going to be worth $1.25 on this. Now you are at risk of being liquidated by the broker, because the way the margin requirement works is that the broker kind of defines its risk. So how much does this move? How quick can we get people out of their positions before they lose $50 on a contract with only $50 in their account, right? So if you go under that, you can get liquidated by the broker. And if that were to happen, normally the first time you don't get a fee or anything, but after that you get liquidation fees, which can add up if you just let that occur. Hopefully you do not. And also knowing that, now if you are in a futures position, let's say you have a $100 account and you have one contract here. So the contract is a $50 margin. So that means if you buy this, let's say you got long into this candle right here, and you got long, we'll just say right here. So every tick above is going to be $1.25 and below is going to be $1.25, right? So if you have a $100 account, the way that works is your account would be at zero because you can go past negative, remember. So if it dropped, what I believe every 10 on here is going to be 50 bucks. If it dropped from, let's just say this was what, 42.33, if it dropped from 42.33 to 41.33, which is only going to be what, 41.33, so something somewhere around right here. So if it dropped from here to here, you would lose $50, but if you got short, that would be making you $50, right? Now, if you dropped double that, we'll just say down to like, so the way this works, so let's say you have $100 in your account and you were to go long up here where this line is right here, which is going to be around 42.33. So each 10 points is going to be $50. The margin requirement on this is going to be $50. So if it were to drop 10 points, which is only going to be from 42.33 to 42.33 to 42.23, so literally 42.23, so right about here. So from here to here, that makes you or loses you $50. So now if you have a $100 account, you still have $50 in your account, so you're good. And now if it were to drop again and go all the way down, you would then fall under the margin requirement, because from here to here you would have lost $50, and anywhere under this your account's going to be under $50, which is your margin requirement. And again, it's different for everything. But knowing that, you now know why tight stops are really important, and you know exactly what strategy you should be trading, which is the strat, because you get tight stops, you don't really have to worry about that. But you also need to worry about those flash crashes again, because if this were to crash down and go through your stop, let's say you're long 4 contracts here and you only have $200 in your account. Again, if it drops literally from here to here, you are at risk of being liquidated. So if you have a stop here and it flash crashes and it market orders you out and it does it way down here, now your account is going to be worth a lot less. So you have to be really careful because it is a leveraged instrument. And I'm not sure if I explained this earlier, but each tick on here, $1.25, like I said previously. And if you were to compare it to the SPY, each 10 points, which is going to be each tick creates a point with 4 ticks. So every 10 points is going to be 40 ticks. And again, 10 points, that's going to be 50 bucks, because 40 times 125, which is the tick value, creates $50. So gain or lose $50 every dollar the SPY moves, because each 10 points is $1 on the SPY. So if you were to look at it in terms of options contracts, you can look at it as you buy or sell this, because you can go long or short, for $50, and you have to have over 50 in your account at least. So now you're paying $50 for, technically it's going to be 50 shares of SPY, because every dollar you gain 50, and every dollar goes up, you lose 50, right? So now if you were to buy 2 of these, that'd be like 100 shares of SPY. What else is going to be 100 shares? An options contract, right? So now you have a $100 margin requirement and infinite loss, infinite gain, just to make sure you guys understand that. And every dollar on the SP 500 is going to be 100 bucks. So you can look at it as a 100% return on whatever the margin requirement is, which in this case would be 100 bucks for 2 contracts, right? So you can see how that leverage is very, very crazy. And since you also do not have PDT in these accounts, you can trade as much as you want. But you need to be careful about, once again, those fees, which NinjaTrader, if you do buy the license, gives you lower fees. And what that license does is pretty much you can buy lifetime, or you can get, I think you rent the license key or something. And it's a fee, either a month or a one-time fee for lifetime. And that'll give you way lower fees. I believe my fees with the lifetime top tier account are around 19 cents. So about 40 cents each trade on the futures here. And about the same for maybe a couple pennies more for the larger ones. So you can see it's very, very comparable to options contracts. I believe on Thinkorswim it's like $1.20 total round trip for an options contract. So it's even cheaper. And what's nice about futures is you get this leverage, but you do not get theta value, which theta is the reason that you can, but let's say you bought a call down here, you can lose money as this goes up if the theta value starts kicking in. And with futures, you do not have that occurring, which is one reason I like futures so much. And then also, another great benefit with futures is that, let's say you wanted to swing short. If you were to do that in the S&P 500, you would either have to buy next week's options so you don't get killed by theta, and you'd have to pay hundreds and hundreds of dollars to have the right to that 100 shares. And you cannot sell or buy those options overnight. What happens with futures is they trade after hours. You can see this. So let's say I got short up here. First of all, in order to have an options contract, it's $100 margin. And once I'm past my entry price and I have a break-even price, then I'm good, right? So $100 to have pretty much an options contract that does not expire, that you can trade overnight. So if you were to get stopped out, like sometimes, let's say you have puts and it gaps up in the morning, you can't close your options contract in the pre-market. But with this, you can close it literally at midnight if you really needed to, if you have a trailing stop. So now with that, and you don't have to worry about theta, and it has its low pricing to get into this, and there's no PDT, you can see why it is so conducive to, at least for traders that are able to make it work. Because some traders can't deal with the mental part of it, because once you don't have PDT, you want to trade all day, and you want, since it's leveraged on futures, you want to catch every single move, because this move from here to here, that's $50 on $50, so that's 100%, just doubled your account if you have like $50 in your account. Then here to here, that's another 100%, so you're up 100 or 200% on your account today, and like whatever. And now this happens, you get chopped up and you lose it all to your commissions, right? And that is the one thing you got to watch out for. You do not want to get over trading. But that is why I like futures so much, because once again, there's no PDT, low margin requirements. You can trade them like options pretty much. And you can trailer stops overnight. You can trade at night if you really want to, if there's news. So like if there's news or something and you want to get in on it, it's like you hear something crazy and you're like, oh shit, I wish I could buy calls on SPY right now. And it's like 5 p.m. Well, now you can go into the futures, you buy 2 contracts on MES for $100, and there it is. You don't have to worry about IV, theta, nothing, right? And I believe that's going to be most of it. As for what you can trade with futures, again, you can literally trade pretty much anything. You could trade the S&P futures, you can trade the QQQ, which is the NASDAQ futures, you can trade the Russell 3000 futures, which is IWM. You can trade copper, you can trade silver, you can trade gold, you can trade cattle, you can trade orange juice concentrate. Like there is you can trade treasuries, you can trade bonds, you can trade pretty much anything. And sadly, you can also trade overseas markets, I believe, but for US citizens, that's kind of a troublesome area as far as I'm aware. I haven't looked into it very much since it's all here. And then also, it makes it easy, especially for new traders. You can get used to how these things actually move, because if you're only trading the SPY, QQQ, and IWM futures every day, you can hop on and it's going to be, you're trading the same ticker. So you don't have to worry about any background information you don't know. You don't have to go and rechart the whole entire thing, nothing. And every single open looks like this. So you get high volatility off the open. So you get high volatility and you don't have to pay for high IV. Now you can kind of see where you literally only have to trade for the first like half hour of the day and you're good. And you're going to see this. This morning I was on for not even an hour, and this was the only trade I took. I got short on this double inside 30-minute to the downside, shooter candle to the downside, and you're going to see that entry is what we can actually draw this out. Let's see it, risk reward. So the entry was right here, and the exit, if you were to just take it to here, or you could take it down to here, which is what my target was, the exit's down here. So what is that? That's 20 points. What is that 20 points? That's $100 per $50 I have in margin on that. And that was in 30, 60, so an hour, 2 hours, which I hopped out like somewhere up in here. Where is it? This was yesterday, actually. My bad. I believe it was yesterday. Yeah, so this was yesterday. But I hopped out somewhere in here, and then I reshorted because I was actually at my computer yesterday. But even today, you're going to see outside 30 right here if you were to take that short, which I did take it short with one contract. I only scalped it though. But I only took that from here when it turned red to right here. And you're going to see 42.31 to 42.28. So what is that? That is, I believe, 4 points times $5 a point. That's $20 a contract. And if you're trading with, let's just say you're trading with $1,000 account and you're using 20% of that, that's going to be 4 contracts. So that's $80 in, I believe most of that happened in the first like 15 minutes of market open. But you can kind of see how this is going to be helpful to people that are already pretty comfortable with trading. If you're really new to trading, I would say stick to stocks and figure out how to actually trade. If you want to attempt trading these futures, you can always go, again, you can go to my website and you get, I believe it's 2-week free access, and you get real-time data and forex and stuff, and you get all the trade simulations. You can trade on previous market tick data, trade it in real time with like, you can trade at 500 times speed if you're really lazy or whatever. So you can do all those types of things, and hopefully this didn't drag on too much and I didn't repeat myself too much, but that is going to be what are futures. And as for a platform walkthrough of Ninja, if that's something a lot of you guys actually sign up for and want to do, then you can go for it. Once again, I don't get anything from NinjaTrader. I get zero money, zero commissions, zero anything from them for you guys signing up. That is fully you. And that is going to be just about it for this video. So I hope to see you in the next one. Thank you for watching.